Many organizations run million-dollar missions on a foundation of disconnected spreadsheets. When the data load becomes too complex, the entire system collapses. Keepers specifically to handle the financial reporting, assuming the administrative burden ends at their desks. U.S. government grants are strictly enforced, legally binding contracts. This diagram shows the typical nonprofit hierarchy. While frontline staff handle the daily entries at the bottom, the ultimate legal liability travels straight to the top of the chart, isolating the executive director and the board. Grant compliance is the single highest-stakes financial and legal vulnerability your leadership team faces. To draw down federal or state money, an executive, usually the CEO or CFO, must sign legally binding certifications. If your organization's internal tracking is inaccurate and you accidentally bill the U.S. government for unallowable expenses, you are effectively defrauding the government. This triggers the U.S. False Claims Act. The False Claims Act is a federal law that imposes severe civil liability on persons and companies who defraud governmental programs. Claiming you didn't know your finance coordinator was mixing funds is not a legally valid defense during a federal investigation. Mismanagement of grant data bypasses organizational shields. It leads directly to investigations by the Office of Inspector General, the independent federal agency responsible for identifying fraud, and carries personal legal liability for the executives who sign the paperwork. The danger becomes acute the moment a government auditor discovers an error, like a poorly filled timesheet or failing to get competitive quotes for a purchase. This diagram shows the flow of capital in a nonprofit. When an auditor flags an error, that expense becomes a disallowed cost. The government immediately demands that money back. You are strictly prohibited from using other restricted grant money to pay back this debt. Instead, the repayment is extracted directly from your organization's unrestricted funds, the precious, hard-to-raise grassroots donations. A single $100,000 compliance mistake can wipe out an entire year of grassroots fundraising effort. Most nonprofits operate on tight margins and do not possess the cash reserves to survive a massive, sudden clawback. Poor grant administration drains your existing core capital, pushing the organization toward instant bankruptcy. If your organization expends over $1 million in federal funds annually, you cross the threshold for a mandatory organization-wide single audit. A single audit is a rigorous, entity-wide financial statement and federal awards audit required by the U.S. government. This diagram represents the Federal Audit Clearinghouse. Every single audit is published permanently in this public database. If auditors find severe issues, your profile receives a material weakness flag. Major private foundations and corporate sponsors check this exact database before awarding any private philanthropic money. Unresolved audit findings make your organization radioactive, resulting in immediate application rejections. Beyond future fundraising, compliance errors choke daily operational cash flow. Most U.S. government grants operate on a reimbursement basis, requiring the nonprofit to spend its own cash first. If your staff submits an improperly documented financial report, the government will reject the invoice. A compliance error can delay a $250,000 reimbursement by 90 days. When that happens, the executive director must abandon strategic planning and scramble to figure out how to make Friday's payroll. Compliance is also your organization's most powerful offensive growth strategy. Decision-makers face a constant, stressful challenge to fund overhead expenses like rent, IT, and administrative salaries. The legal mechanism to solve this overhead crisis is found in the U.S. Federal Uniform Guidance Updates, specifically 2 CFR 200. This refers to the Code of Federal Regulations governing administrative requirements, cost principles, and audit standards for federal awards. This model demonstrates the uniform guidance framework. Nonprofits with rigorous, proven compliance structures are eligible to claim a 15% de minimis indirect cost rate. This standard flat percentage recovers overhead without complex line item tracking. It allows organizations to legally divert hundreds of thousands of dollars directly into general operations. To execute this, you need a data architecture capable of perfectly tracking restricted funds by specific project codes. Decision-makers who fail to structure their grant budgets to capture these indirect costs leave massive amounts of money on the table. By ignoring compliance architecture, executives actively starve their own organizations of the legally available funds needed to scale. Auditors evaluate a core principle known as tone at the top. This tests whether leadership has provided the structural environment and tools necessary for compliance. Forcing frontline staff to manage complex federal grants using disconnected spreadsheets or shared email inboxes leads to systemic failure. Generic corporate software forces nonprofits into corporate workflows. A sales CRM is incapable of tracking client program outcomes or verifying volunteer compliance. Even a brilliant grant coordinator cannot overcome the friction of a broken organizational tech stack. Only the executive director and board have the authority and budget to purchase purpose-built compliance software. Systemic failure is a direct result of executive inaction. Hibox for Nonprofits provides the software architecture designed specifically to solve mission-driven compliance and operational challenges. Take BrightPath Youth Development, a 12-person team, a $1.6 million budget, serving 340 underserved youth. This diagram illustrates their original operational state. Tracking enrollments, attendance, and volunteers required hours of manual cross-referencing across Google Sheets, paper sign-ins, and text messages. They centralized operations into a unified data model. This stable architecture connects program management, volunteer management, board management, and compliance tracking in one hub. The built-in learning management system automated mandatory compliance training and background check verification for all their seasonal volunteers. The board management module eliminated email friction, giving the C-suite a real-time dashboard for meeting schedules, governance documents, and oversight deadlines. Backed by clean, funder-ready outcome data, BrightPath secured 2 new grants and served 35% more youth within their first year, all without hiring a single new staff member. Moving to purpose-built software like Hibox organizes compliance data into a scalable, high-visibility engine for organizational growth. There is a central rule in the U.S. nonprofit sector. Grant writers win the money, but grant administrators and their data architecture keep the money. This layout shows the stark choice executives face. You can rely on high-risk, fragmented operations or choose automated, strategic oversight. Decision-makers do not need to manually enter receipts into accounting software, but they must mandate the correct digital architecture. Implementing Hibox protects against bankruptcy-inducing clawbacks and allows you to confidently pursue multi-million-dollar grants. Stop risking personal liability by forcing your staff to use generic, adapted business systems. Access the free Strategic Governance course and claim your concurrent Hibox for Nonprofits free trial using the link provided here. True executive governance means giving your team the purpose-built tools they need to protect the mission and scale its impact.